Good evening to all TradingLink partners. Today is January 11th, 2025 at 1:55 a.m. It's time for another weekly trading share session. Today is the trading day for non-farm payrolls. Due to last week's New Year's Day, non-farm payrolls were placed in the second week of the month. There are two superstar trades today. The first is gold. After the non-farm payrolls data came out, rapidly fell through. Support level reached 2,665, and then quickly changed. Reached 2,698, spot returned to reach. Let's take a look. Spots, timing chart. After the non-farm payrolls data, the reason why gold has become a star breed today. First of all, the first point, he reached, the whole October 31st and December 12th to highs of a downward pressure line. At 2,735, the intraday high reached exactly 2,735, this pressure line. We have shared this privately with all the traders. After this position, we can see how this position came out. When the data came out, the entire non-farm payrolls data is far exceeded the market's expectations. The US index was also long sun. That should be a negative for gold. It did produce a short-term, drastic fall. We can see the overall decline of the whole situation. The moment the data came out from 2,704, it reached 2,686. That's about $18 and 1.8 times the decline. But the whole time, it was only a 5-minute drop. Why did this happen? Because gold in the recent period has been on a positive correlation with the dollar. We can look at the dollar index. The dollar index in the past week, for 4 days in a row, strong long position on Monday, because Trump made a special comment. That caused the market to be more volatile. But then from Tuesday onwards, the dollar was on a roll, and gold has also seen this kind of market. In fact, this positive correlation has been seen throughout history, and it's also been seen in phases. First of all, the underlying logic. It's because people think that the dollar economy, US economy is good. US inflation is likely to continue to amplify. In terms of purchasing power, gold, it is possible that the price could rise. Possibly, but it's still a small probability event. It's also a short cycle event. As you can see, in the last 2 months, all the positive correlations have fallen rapidly, and even this waterfall. This kind of violent. That's exactly why, in this week, we have been paying attention to the price of 2,735. Today's price is also very accurate. We can see, in the 15-minute line, at 10:35, the price of 2,735 was exactly given. Today's strange market appeared again. In the second trading week of December, it should be the second trading week of December. We have shared that the spot price and the futures price, how to generate divergence, how to widen the spread, and how to trade this kind of market. In the December 12th weekly share we have talked about it. Today we will focus on analyzing, because of the situation that happened again today. In the evening, many traders contacted us, saying what to do in this situation, because their orders have incurred losses. Let's look at 2 actual cases today and let's take a look. Today at 10:35, at 2,735, the highest point of the day. Let's take this client as an example. This client, let's take a look at his order. The time of his order is now 23 o'clock. Then his opening order is 16:28, exactly after 10:35 Beijing time, at 2,735. In the first minute after the high, he placed 3 short orders in a row. Let's remember this price, remember this K line. He was at the high of 2,735 at the same time. The first minute after the market came out, he placed 3 short orders. The corresponding price should be 2,732. That's the current price. But what's the problem? The problem is that we can see the price of gold. This client, this trader, is very, very accurate. He has also found. We have been discussing this kind of problem with us. We've been discussing it all night. Since he was able to catch such a high price, and the market is falling fast. From 2,730 to 2,715, there was a drop of about $17. Each of his 3 accounts took 0.1 lot. He has a $10,000 account. He should have made more than 500% at the lowest point. But his current account is, and we see that even at this moment. Gold has not broken through this high, right? Let's take a look. Let's take a look at MT4. We can see that at the second high, the price has broken through the intraday high. It broke the intraday high of the futures price. At the third high, it's tied with the second high. Let's take a look. International futures gold price at its third high point, at the third high. The second high, there was a difference of $6. The fourth high is equal to the third high. Let's take a look at Mount 4, the fourth high. It's already slightly above the third high. And we can see how the entire spread has changed. At the international gold price of 2,735, when the first high came out, the MT4 price was 2,693. What is the spread? It's $42, right? Okay, let's look at it again. It's at 2,696. What's the international futures price of gold? It's 2,726. That's a $30 spread, right? The second high, it's $1 short of the first high. The second high in Mount 5 and MT4, 2,697 is $5 above the second high. What does that tell you about the whole trader? Contacted us. Why did I open at the highest intraday high? But I'm losing money. It's a floating loss. What is the main reason for this? What is the main reason for this? The main reason is the price of international futures determines the global gold price. Determine the global gold price is also all mass commodities, including spot crude oil. They all use this price as a reference. The futures are all traded on the US NYMEX and COMEX exchanges. Gold and crude oil are the two main exchanges. The price is made by both the long and short sides. Is the actual market fluctuations and summarized generated. However, this price in Mount 4 or MT5, he is the spot price of gold. Why is there a spread? It's the futures that lead the market. Spot follows the fluctuations. Then this spread, that's how it's created. But where does spot gold come from? It's generated by the bank quotes. To put it bluntly, in this process, the bank assumes the role of a broker, responsible for such a role in the matching. That's why many foreign exchange platforms can realize clients of such a large number of orders completely closed. The so-called CFDs, this is the principle. That banks assume the role. Why the spreads are differentiated. Let's talk about it. First of all, the first point. There are many large international funds to do this kind of futures and spot arbitrage. For example, in this strong stretching process, they will go long in the futures market and short in the spot market. He will be averaging the $20 spread between gold and spot. Will quickly widen to 40. We've just compared. Once he thinks that the futures price has peaked, he'll make a reverse move, going short in the futures market and go long in the spot market. Why is that? During this wave of upward movement, futures, the price of spot gold will break through the highs within the up. This is the reason. This is the first reason. A lot of funds are doing this kind of arbitrage trades between cash and futures. The second reason. Banks will also take the initiative to widen the spread in this kind of extreme volatility, especially the swing highs and lows, when everyone is very clear. Banks will also enlarge to widen the spreads. So we can now look at, the whole spread is about $23. It's about $12 higher than the average. It's about $10 higher. Why is that? Because we just said that at these highs, a lot of MT4 and MT5 traders can also see this kind of high, because this kind of high point is still very obvious. He will set up a short position. Let's say this client, he feels that he is at the within a minute of the highest point, he put in 3 orders. That order is actually quite accurate, but there are a large number of such clients and orders will be sent to the bank. Banks need to hedge their orders. So banks can't hold so many short positions. So within the next few days, the market falls sharply. These short positions will make a lot of money if the bank is in the process. If the bank acts as a dealer in this process, their losses would be huge. so the bank will actively amplify the false difference, resulting in this kind of market differentiation. Then the bank may also send the order to other platoon and system. This is the second reason. How to operate this kind of market? The first point we suggest. As soon as gold shows this kind of large-scale futures and cash spread enlargement, do not rush. At the first high point in the international market, the first high is to go short. If you do, there is a possibility that today's situation, and this has happened twice in a short. It's happened twice in a short period of time. This high, this high, this high, this high. These three highs are particularly attractive prices, and you'll find your position is now in the red. The second point is when to do it. When to do, our suggestion is to wait. After the entire high, the second high, this is a very standard double top pattern in international futures. This is a very standard double top pattern. You can take a short position in Mount 485 and go short in Mount 485. You might be able to make it to this position, and it becomes a real intraday high. Then again, let's say that if this happens, I didn't make it to the high, what should I do? That is to adhere to the futures price record. Analyze the pattern of the futures price records. Let's say you think the pattern in the next few trading days, you think it's going to close down, longer upper line. And from next week onwards, it's going to be a short downward move, or even something like this. And that's in the spot market, in MT4, in MT5. You're going to hold on to this short position, because now for now, after all, his spread is only less than $10, less than $10. The last time a trader complained to us, it was because of this spread stretching over and over again. He didn't hold his December 12, 2,750 short position. He didn't hold it. But 2,750, as you can see. How much has it fallen in just 5 days? Down $150. It's 15 times. I think it's very clear. The trader's position was 4%. 15 times is about a 60% gain. He missed it by just 5 days. Of course, there are traders, more experienced traders. This wave of shorting can make a complete pattern, like this pattern. We already know how to operate, although now there's a spread of $5 to $6. Theoretically, the client we analyzed just now, he opened to the highest 2,732. He should have a gain of $12. His 0.3 account should have a profit of $360. Right, he has a loss of $160. This kind of market, after we analyzed it with him, he said, I don't care about the floating loss. I want to continue to make this pattern complete. I want to complete the pattern. There is another pattern. We need to tell everyone that once. Reach the 275-day low later or tomorrow. The lowest point of the day, maybe for this client. For this client. The stop loss just came off the cost. Dolly just stopped out of cost, because in the last pattern, the other client who was swept out, because it was out of the cost level, he thought the market had changed unusually. So he flattened the order, and missed the 15 times market. This kind of experience, we've also shared with this trader. To avoid this kind of situation, that's why gold is very difficult to do, because it often generates such differentiated fluctuations, and gold's other technical patterns. We'll not analyze, we're not going to expand on them. Okay, let's talk about crude oil. Crude oil today is the superstar of the week. For the entire 4 days of the week, the last 4 days have been long, more than the last 4 days. After doing a high-fold consolidation, today it quickly reached October 7th, nearly 4 months high. Breaking out of the 73 box, that crude oil we said before. Do not pay attention to this product in the short term. Because he went very lifeless and lack of vitality, then why did crude oil produce such a big fluctuation of a long? That the main reason is the influence of geopolitics. Geopolitics has been going on for half a year. Why is it affecting now? Because on January 20th, after Trump took office, he's likely to get tough on Iran and Russia. And in the near future, immediately, tougher sanctions against Russia could affect the supply of snakes. And then once they're imposed on Iranian animal that made the Persian Gulf, by the entire access to the sea for oil once frozen, crude oil could quickly reach all-time highs. Above 147. Above 147. That's a super risky event. That's a super risky event. Trump administration's recent attitude toward Iran. There's still a lot of probability. It's still very high. It's still very high, in my opinion. Crude oil is mainly because, after a long period of depression at the bottom, accumulated to many short positions. To make a quick adjustment, quickly a chopping position, that does not rule out next week to make adjustments, back down to the 74 line. That the whole in 2025, overall crude oil is too long idea is dominated, that is very fortunate. Crude oil finally got rid of this. Crude oil has finally gotten rid of this depressing market at the cross-line level. Because once crude oil returns to normal, his weekly fluctuations are $5 to $7. So traders like us do this kind of weekly short-term trading. His rate of return is still quite high. It's very efficient, may be much higher. Gold such a trend. Finally we talk about the US dollar non-US currencies. We've had a few trades in the last few, sustained bullish. But the dollar could face a risky event next week. Is Trump's inauguration speech, after or before, next week? There may be a long profit taking profits. Now let's say there's a long position that's been held for a long time. Can close the position, you can close the position. We can wait and see next week. The whole first half of the week. And finally, Bitcoin. Bitcoin is still trading in a range, at the upper Bollinger Band. At 100 to 1,000, it's pulling back to the lower band. As you can see, the retracement was spot on. $91,500. $91,200. It's created another pullback to the upside. The medium and long-term trend for Bitcoin. We're still looking at after November 20th, after January 20th. There's a chance that it could break above the previous high of 120. Spot can continue to use. It's a good idea. This is the whole of our analysis this week. Today said that this week said more, mainly because a number of traders discussed with us in the evening a lot about this kind of gold, this kind of disc. A fluctuation of the situation. Just now we also analyzed the method and experience. Okay. Thank you for listening to this week's analysis. Have a good weekend.